This is the agenda of the next 30 minutes. So we're going to give a quick background for why we added this functionality and what it does as a high level to benefit users. So what are they good for, basically? What are project rates useful for? And then I'm just going to give a little bit more context to the rate change in terms of the fact that there's two methodologies to run commercial management and performance management project controls in Unify, and just how the different rates management affects those methodologies is essentially what I'll be talking about. And then I'll demonstrate exactly how you will apply project-specific rates through the interface, and then move into a very quick reminder about next week's one on enhanced cost management. Okay. So typically with Unify, what we've had is two types of deployment. We've had an enterprise deployment where a organization is running all of their projects in Unify, and they're happily managing that, and it's rolling along, and they're using timesheets and contracts and creating invoices and looking at profitability and all those good things. And then we've had deployments where it's a project-specific deployment. So the deployment itself is for a limited time, and it's there to do a specific project, like the Western Harbour Tunnel in this instance. And we want to sort of get away from that if we can. Our goal is to, have enterprise deployments where all of the good knowledge that you get on every project can be shared and used in machine learning type instances and all that sort of stuff. Notice I said machine learning, not AI there. I'm going to try to avoid that two-letter acronym for this entire presentation. So one of the things that stopped us from being able to do multiple projects within an enterprise when they're large projects is the fact that they'll have the way that the large projects are structured. They tend to have activities as projects. So they tend to have that's set up to be able to track the depths of their requirements. And within that, Unify's sort of portfolio rates, its resource rates, was portfolio wide. In the contracts module, you could tailor the charge rate to each every contract. So that's how most of the enterprises have managed that. Most cost rates are consistent across projects, but charge rates change depending on the project. That was managed on an enterprise basis through the contracts module, and still can be. But project specific, it was one in, all in. So by changing to allowing different projects within Unify to have different rates, we've now got some enterprise deployments with our global engineering partners where they're managing multiple projects within the one deployment, particularly through the construction phase RFI process that they have to deal with. So that was the big driver of the change, their requests around that type of capability. Hopefully that makes some semblance of sense. This might help put context to it. I'm still getting badgered to let people into this room. What are these rates good for? What are we using them for? Why are we even bothering? There's two elements to the rates management in Unify, the knock-on effect of what having rates management libraries do for you. And all of this is human resource rates management, not necessarily material. You can manage your expenses in Unify, but not really as a rates library. We're talking about managing professional services here, and our ERP deployments are mainly for professional services firms. And so the two things that drives are your invoice, both to your client and in certain circumstances as a recipient created tax invoice to your subconsultants, or as part of a charge-in invoice if you're running a JV, which again is another general reason why we have project-specific deployments that will probably stay, and that the joint venture is an entity in itself, so it's not really project-specific, but it's been set up for that project, and they use our system as the financial management, the commercial management, and project controls for that venture. And so in that way, you need to be able to invoice that joint venture's client, but you also need to be able to invoice into the JV partners. And then you also need to manage the subconsultant and general expense invoices as well. So rates are very important in that, and I'll demonstrate that in some detail during the detailed interface presentation. And then the second part is performance management, so managing the money and making sure that cash flow is sufficient, that profitability exists, profit sharing happens in a JV, for example, and that project progress is actually going to plan or ahead of plan, or isn't going to plan, and what are we going to do about it? So that earned value project performance metrics. All of that is underpinned by project rates. And so, once you get into the weeds on this stuff, which I won't in this demonstration, it does get quite complex, and therefore quite challenging within a spreadsheet environment that some of these projects often get started out in, and also equally in an enterprise sense within normal corporate accounting systems. To get the detail that you need to do invoicing is a challenge. And so, you know, some of the things that we've discovered when we've gone into what we call a brownfield project, where they've been running a project for a while in spreadsheets, is, you know, we'll always do a data uptake process and a reconciliation back to the spreadsheet. And through the transparency and the database capabilities of the application, there'll be either an under or an over invoicing amount to date on those projects, pretty much 100% of the time. Sometimes it's not significant. Most of the time it's not significant, but it is wrong. And I think that's a fundamental around why you need robust structured databases for these types of things. Then obviously you can get into the performance management side of it as well and start to track progress and see how you're performing on an earned value basis, and hopefully being able to do that in a easier, more distributed data capture process. So one of the things that we like to try to promote is a design lead or a team lead doing their own resource planning on their work activities. This is distributed data, which is again why the activities project-based model is often used over the top of contracts. And then, you know, you can review that information from a program director, project director perspective and challenge and question and ask, rather than going to them for a project controller initially in a meeting saying, where you at with this, where you at with that. Okay, so we do need other ingredients for our, for those things to work. We need to have a task breakdown structure. We need to be able to track that task breakdown structure in terms of its % complete. We need to have a level of effort estimate for those tasks for the people who are going to work on them, or their classification that they're in, how much time we need for a certain engineer or what have you. We need to phase that effort over time. And then we need to snapshot or baseline that effort to track progress. So these are the other ingredients that you need to have, all of those ingredients to make the cake. Any of them missing, and you're only getting, you know, a much smaller picture. You certainly can't do everything that we would, you know, potentially be able to do. So if you have all of those elements and you're tracking all of those bits, you can start to get the outputs that you need to run your projects and your enterprises. So if I was to just jump into Unify now for a moment. Still letting people in. It's a real challenge from my ambidextrous capability. Not starting there, but here. So this is sort of out of the box dashboard that's frequently used in our major projects deployments. It's got 4 reports that I'm going to go through, but just looking quickly at this one, everything is driven by rates and those other ingredients that I just mentioned on the previous slide. And so, you know, you've got an accumulative actual cost coming from timesheets times the person's rate at that point in time. So a rate history, these projects go over a long period of time. You need to have rate history. We've got 10-year programs on our books. You've also got the planned cost, which is using that rate history multiplied by that baseline that we talked about. And you've got progress that's coming against that. And so those 3 metrics are key in checking performance on a job, and rate history and rate management is crucial to that element. This is looking at it holistically across all activities in a project, but once we go down, we can drill into that. And this looks at work packages and specific RFIs. RFIs is a big one that we've seen with invoicing accuracy in Unify over old traditional methods of a bucket for RFI. You don't know how much time you spent on a specific one. So invoicing for it can be quite challenging. And we've got CPI and SPI metrics in here across those work packages. We've also got estimate of completions, both from a indicative measure based on how you're performing, CPI and SPI, but also from a bottom-up resource planning forecast to complete, giving you that EAC. So if I was to drill in on that, I'd get the individual activities that are making that up, and I can cut and dice those into other things that would provide subsets of that information. If I click on any of these, I get the resulting activities that relate to that and can drill in and narrow in on those elements. The other 2, this is looking just at phased actuals versus budget, again, a cumulative thing. And then this is way down into the detail of who's actually working, what their budget and forecast is, and where the variances are on each of these packages. And so The essence of rates, though, in this is that every time you look at these reports, it's always a dollar figure being reported on. And to get that actual cost, earned value, scheduled cost, and CPI, SPI, we need to have really accurate rates management to be able to get that information. So that's kind of what we're looking to achieve and why rates are important. And as I said, traditionally, the project-specific rates were a whole of project perspective. You couldn't be nuanced and have different rates in here for the different activities. That's the thing that's changed. All right, so to put all of that into context, there are two methodologies for capturing that information. And so what I'm showing you in this particular screen is the activity structure setup for what we call project-based methodology. So that in terms of how we're going to describe it, it's a unified language, if you like, project-based methodology versus a contract-based methodology. And there's subtle differences throughout the two instances. There's some benefits and disadvantages to both. It's just the fact that unifiers are been developed out over 20 years and different requirements get met by different feature sets. They aren't mutually exclusive. You can mix and match within your enterprise and have the benefits of both depending on the requirements. So for example, large projects tend to do well with this structure here where there's a WBS screen within the projects system. Whereas sort of enterprise work order type or bidding and proposal type management does well through the contracts module. So if I was to remove and change this filter here to the contracts-based one, you can see that I've just got these work orders and a financial management project, which I'll explain for invoicing in a moment. And if I go into one of these projects, I can duck across to the contracts module, click on the contract WBS, and I get the same structure that I had in the previous screen. It's actually identical to the task-based through projects. So we're managing the same types of data in this example. We're just doing it through the two different methodologies. And so that's something to think about and talk to your consultant about as to which one you should use and why and what would be the benefits and work through that. Because like I said, once you get into the details of this stuff, setting it up is very important. But once you set it up, it kind of runs on rails, and for 10 years, you're just churning out everything and you know it's bang on, everything's accurate. And the level of effort is significantly less. And so that's the activity. Remember, that was the first part of the puzzle on the go back to my little slide here. The tasks, we haven't tracked them yet, but we've set them up. So we've set up our tasks, and you would have also seen that I started to put effort against those tasks. So going back to the Unify screen again, you can see this is the contract-based one, sticking with that. I've got the task and I've got classifications being put against them with effort allocated. That effort hasn't been time phased. That was the other thing. That is done through the schedule interface when you're doing contract-based forecasting. And so you now can see there's a timeline and there's the hours that have been allocated to these disciplines. It doesn't have to be disciplines, it can be people. And that's being phased out over time. That is baselined as well. So you'll see I've got on here the view of all, so you can have an actual forecast and a baseline. So we've got a baseline hours. That's done through clicking that button. And so for this particular work order, I've now got a baseline that I can track my performance to. And then, and this is all hours. And then what I need is I obviously need rates to determine the cost. And so when I apply a rate in the contract or I apply a rate in the resource module, those rates are being applied to this timeline to generate costs when you come to the earned value and the progress. So when I go to the earned value, this has got progress coming in against it. We've got milestone-based progress where we're ticking what's happened to this particular activity in terms of where it's at. Typically, a lot of our work is design-based activity. So it's about issuing out drawings or other documentation and tracking that progress. It gets a % complete earned when you select those phases, and it gets a date that's achieved, and that generates a progress percentage. You can see here, though, everything then gets represented in dollars based on the rates of the people who have been allocated to those tasks and the timeline on those tasks. And so again, without rate management being successful, we wouldn't be able to get this underlying information. And so the other element of it, obviously, is the timesheet element. So people are timesheeting to these tasks as well. If I was doing a project-based one, if I just switch out of this for a moment and go back to the project-based tasks, I would be capturing my planning in the resources module. And you can see here we've got resource planning. And you can see we've got all of these activities, similar labeled activities, but now against projects with their budget, actual and remaining hours put out over time. And you can see there's a curve there. If I click in on one of these, again, you'll see classifications, cost manager, admin, and people in the same view. I can filter that out and just show classifications, for example, and then put the hours out against that or against people or both. There's lots of options. It's a platform product that enables you to do what you need. Again, there's a budget baseline that enables us to track the performance against baseline. And so you can see the blue being budget and the green being actuals there. And that's where we're then going to get our performance metrics coming in once we get progress. From a project activity perspective, the progress gets done in the time module and the milestones of those times. So similar labels again, and you've got an earned value profile and a progress perspective coming in against that. And so same concept, same sort of methodology, if you like, but just in a different interface. Again, one of the benefits of this particular interface is that you can allocate these people to roles, and depending on their role, they will inherit different capability, and you can control who can do what. There's a lot of configuration in the tool that enables you to be very flexible or very controlling in what people can do, improving timesheets, timesheeting to standard tasks versus timesheeting to contract deliverables, all that sort of stuff. And so, talking to the consultant, discussing your requirements, and like I said, having a mix and match methodology within your enterprise is definitely possible. And then now we get to the interesting part of the equation, the new rates capability. So you'll see here in terms of this WBS activity 1, there's now a rates sub-navigation. This is a Unify 20 feature. Typically, that would have only been in the all activities section. And so in all activities, you would go into rates, and for your resource pool, you would set what the rates are. Now, again, there's quite a lot of detail into the way those rates can be set. You can just manually key them in. You can import them in from a spreadsheet. You can set them by classification, which gets set as a global level in the configuration of the system. And then you set them at an effective date. So that will change over time. If I look at Arthur Williams, for example, he has a rate history going back to 2020, and it's changed over time. And even the methodology of calculating it has changed over time. So this one is actually a bottom-up methodology where we're using multipliers, salary, and hours in the year to generate a rate automatically based off a formula for both cost and charge. It would only be using that rate from the 10th of July onwards in 2024. Historically, it would have been using these other rates. That was a bad period because it was making $20 loss per hour. And so, that capability is essential and fundamental to the whole way Unify then is able to calculate things from that point on. If I select back into my activity 1 and just go back into the selection of people, you can see that it's telling me that rates are currently defined at the all activities level. So this is just a way of saying, you can't edit these unless you consciously want to, because we think it's an important thing for people to not accidentally change. So it's the same screen as when you're in all. You might forget that you're not in all projects, and you might be changing things you think is global and you're not. So to actually edit this just for this particular activity, you have to hit the edit. You have to consciously hit the edit activity icon. So that was done on purpose. And then it also, through doing that, we're able to give you some flexibility around how you want to manage the rates. So as a starting point, you can copy the existing rates from this to this activity from the standard, or you can set everything as blank. It's up to you. And so if I select copy as existing, everything stays the same, but now I can edit specific people, and that will only apply to this particular activity. And the effective date is being set as the 15th of August. And so any date that was prior to that would be using the old rates. So I would need to set that back to time where I think I need to. And so now that's going to put in a new rate history for the people that I changed. And it'll also put in a project-specific rate history for everyone else, but it'll be equal to the standard because I didn't actually change it. So at that point in time, they're kind of in harmony. But now I can change these rates at any time with a new effective date, or drill in on the person here. And when I drill in on Arthur this time, the rate history, even though it's the same because I copied them, the rate history calculation will be only for this activity. So he still has a global rate history that works on every other activity that has the global rates, but I can come in here and set a new start date into the future, which is used for forecasting. No longer use automatic, but per classification for these things, and hit save. And he's now got rates based off classification, again, being the drafting manager classification. You can even set up classification specifics for this project. If I quickly go to the resources configuration screen, you'll see that under the classification system here, this is again selected. This is new. You would never have had a project selection here in the past. And it's remembered that I was in that project from the resources module, so now it's showing me this one. And so, yeah, I can now edit the rates here, put an effective date, and that will update everyone who's been calculated by classifications automatically to have the new rates applied. So that's the new rates management that is project specific. The benefits of that, obviously, we showed through the reporting, but equally the benefit I wanted to sort of demonstrate is also through the invoicing. And there's some people on the call who are like enterprise resources that might want to consider some of this stuff. There's some pretty cool other ways of invoicing. Most people on the call would be familiar with this screen where you have your WBS, you can build it up, but still invoice as a lump sum, or you can do time and material if it's time and material, and a whole bunch of functionality around that. And so here I am claiming on this side, raising my invoice document, signing it off, send it to the client, getting paid. And I can claim the amount from the timesheets that have been entered here and have that automatically come up against the invoice, which is great. And I wouldn't recommend changing it necessarily, but you still also have the benefits that these large infrastructure projects have to their way of invoicing, which when it's schedule of rates is really quite strong. And so there's, again, two methodologies for doing that type of thing. The first one is what we call a program revenue and a program cost invoice. So what I'm doing now is you just create an activity called finance, right? And no one else can see it in the way you set it up, and you can manage everything in isolation from that. But what it's going to do is it's going to include all of the time and all of the rates, including the project specific rates we just set up in here, across all of these work packages when you're calculating an invoice value, which is a huge benefit, right? So if I come in here and how do they get in here? They get in here through in the value screen by adding the projects. So there's a plus that doesn't exist when you're not doing program revenue. And that program revenue is showing you the projects that you can add to this particular contract that'll then automatically claim against it. And that's already been done for the activities I want here. You can see you can still have a lump sum item down here, which you can claim separately in the invoice module. But when I go to the invoice module here, what it's doing is it's calculating the value based on this period end date. So all of this stuff, apart from the lump sum item down here, is a calculation using the rate values that exist on these activities, which again now can be different per activity, which is a fundamental change. So if I was to change the date here to be the 15th of August, any timesheet records that exist, which there probably won't be many in this dummy database, would be updated in this amount complete. You can see it's not editable, and away you go. You then create the invoice document that takes a snapshot of all of the records that make up that value in the invoice itself, which enables you to compare what changes from one month to the next, which is another massive fundamental in terms of previously claim values being different from one month to the next because people were away and didn't timesheet, or their rate was wrong or something like that. And so these types of difficulties in reconciling that information is simplified through this data capture process, through reports that you can then present to the client with those reconciliation items, just the outliers that occur. So you might have 300 people working on a project, might be only 5 changes. You can present those 5 changes in a summary document. And so this claim is ready to go with $83,000, and you can create it, sign it off. Similarly, and this is the other one I think would be more interest on the ERP side, is you can actually do it in the documents module with the non-program revenue ones. And so that's done through, if I go into the templates for a minute, and you create a new tax invoice template. And what you do is you can, oops, what's happened there? Try again. There we go. You get to this step in the template setup, and there's an option here to decide how you want this. Where does this invoice get its data from? And you can see you can go project, the selected project you're in, plus its sub-projects, collection of projects, or all projects. And there's an information setting here that will tell you more about that. And once you set that up and you go to raise the invoice within any project, right? So I'm doing it within this one called finance. And I click the little document and I go tax invoice. What it does is it uses the principal if it's a revenue contract, the supplier if it's a cost contract, to determine how much information to bring in. So when I select this ABC Architects, Bob Smith, he was the client on all of those contracts that I was showing you before. And so here's all of the WBSs across different contracts with the different classifications coming in. And you can see here that the different classifications will have different rates. There's the drafting managers on 120 there, and the drafting managers on 100 there. So different activities, same classification, different rates. And the amount that gets calculated depends on the date that you select the invoice to. And so if I was to, I know this one was doing it to the 15th of August. If I do to the 12th of July now, recalculates, that was 111 before, it's now 71. So wax on, wax off. If I go back to today's date, I'm now looking at 111. And so it's calculating all of that claim value for you automatically and snapshotting that as a history of the information of how this claim got built up, ready to present. So if you're doing charge invoicing, and as I said, even if it's a mix where some is that and some is lump sum, and even if you've got a fixed upper limit, you can still control that within Unified, but use this calculation to determine how much to invoice in the period, and away you go, sign it off, got yourself the invoice done. It's using different rates depending on the period, and you're done. And I've noticed I've gone over time, got a little bit carried away there, but that's it. So that's where the change comes in. You can now have different cost and charge rates across different activities in the system. Hopefully that means more enterprise deployments, more sharing of information, more learnings and benchmarking, and hopefully more streamlined setup as well. Oh, like 1 minute for questions. So next week, we're looking at more structured, probably a different audience again, use of Unifier around cost control. So all of that was done in the contracts and resource module, but under the cost module, we have more structured cost management control for enterprises running internal projects or property developers running large projects of construction that are outsourcing a lot of purchasing and management of. They want to track the overall budgets. They want to approve the overall budgets. They want to change control the budgets. These are some of the things that we've had before, but we've enhanced significantly in Unified 20, especially around managing change and communicating the management of change around costs when you're managing someone else's money or when you're managing your own money on a large project that isn't just resource-based. Obviously, it has purchases and other things going on to manage in that space. So hopefully anyone on the call interested in that, you can sign up for next week's webinar, same bat channel, same bat time. And I will see you all then.